Good afternoon, and thanks for joining us today for the first webinar in our 2020 Spring Affordable Housing webinar series entitled AHP Funding Opportunities. I'm Elizabeth Harriger, Partner and Director of Affordable Housing Services here at McConnelly & Asbury. McConnelly & Asbury is a recognized leader in Pennsylvania in providing audit, tax, and consulting services to affordable housing developers and property management organizations. We have relationships with the Pennsylvania Housing Finance Agency and multiple investors and can assist developers in connecting with them or working through issues with them. Our firm currently serves over 125 affordable housing entities, and in addition to providing annual audit and tax services, our services include 50% tests, 10% tests, and a variety of low-income housing tax credit consulting in addition to development cost certifications. I encourage you to check out the Affordable Housing page on our website to learn more and to subscribe to our Affordable Housing Gurus blog to stay up to date on industry news and best practices. Before I turn things over to our guest presenter, there's a few housekeeping items for today's webinar. If you have any questions for us during the webinar, please submit them through the built-in questions function in the webinar control panel, and we'll do our best to answer them after the webinar. There will also be 3 polling questions throughout the webinar, so be sure to answer those if you are looking to obtain CPE credit for today's webinar. We're excited to have Fred Banuelos with us today as our special guest. Fred will be discussing the funding available from the Federal Home Loan Bank of Pittsburgh for the 2020 funding round. Fred is the Community Investment Business Development Manager at the Federal Home Loan Bank of Pittsburgh. Prior to joining the bank in 2018, Fred worked for the Harrisburg Housing Authority, where he managed operations for the Housing Choice Voucher Program, Public Housing Program, and Capital Improvement Program. Prior to that, he was Director of Housing Management for the Housing Authority of the County of Dauphin and a Deputy Director for the Pennsylvania Development of Community and Economic Development. Before we turn things over to Fred, let's get right to our first polling question. Is your organization planning to submit an AHP application this year? Yes or no? If you're looking for CPE credit, you must answer each of the 3 polling questions, including this one. Otherwise, we're just curious to see our attendees, how many of you are planning to submit an AHP application for the 2020 year. We'll take a few more seconds here to make sure everybody has an opportunity to select an answer. So more than half of our attendees today are planning to submit an AHP application. Great, so you're in a great spot. Again, if you have questions, please type them into the question function and we will get to them at the end. And with that, I'll turn things over to Fred.
Thank you, Elizabeth, and welcome to the 2020 Affordable Housing Program webinar. Today, we will go over the AHP program, its scoring, feasibility, common mistakes, changes, and key dates to look out for. So, what is the Affordable Housing Program? AHP is a financing resource that helps the Federal Home Loan Bank of Pittsburgh member financial institutions partner with community developers in creating affordable housing. We define affordable as households that are earning equal to or less than 80% of the area median income. For rental projects, at least 20% of the units must be reserved for households at or below 50% of the area median income. Every project applying for the Affordable Housing Program must comply with all fair housing laws and regulations. The Federal Home Loan Bank also promotes diversity and inclusion and the utilization of minorities, women, and individuals with disabilities, as well as minority, women, and disabled-owned businesses in all of our business activities, including the Affordable Housing Program. So where does these monies come from to make these grants? The Federal Home Loan Bank funds the AHP program with 10% of its net earnings. It distributes those funds in the form of grants or low-cost advances. The maximum amount of $750,000 per project. Each member financial institutions and sponsors apply jointly via the AHP online system. This year, we have $2.86 million of AHP subsidy available in 2020. So let's briefly talk about the members' responsibilities. Since a sponsor cannot apply directly to the Federal Home Loan Bank of Pittsburgh, it must partner with one of the Federal Home Loan Bank's member financial institutions. There are close to 300. And every application must include a Federal Home Loan Bank member. So the member should review the applications prior to approving the application in the system and make sure that the application is submitted promptly before the deadline of 5 p.m. on August 11th. Member financial institutions may participate in projects and help earn points, but we'll get into that a little more later. What are the types of projects that we look for here in AHP? Well, the types of projects include rental, lease purchase, home ownership, or owner-occupied rehabilitation. The funds may be used for new construction, rehabilitation, or acquisition. But please remember the income requirements. All projects must serve a household at or below 80% of the area median income. On the side here, we have some examples in each of our 3 states. There are 2 components to AHP. There is the pre-award, which includes scoring and feasibility, and the post-award, which consists of the disbursement and long-term compliance and monitoring. Our next slide illustrates the 2019 application scoring outcomes. It was a highly competitive round with 165 applications submitted. The highest score was a 79.5, and the lowest approved score was a 67. This resulted in 66 funded applications. As you go through the application process, please guide yourself by taking advantage of our resources. They're all located on our webpage and include our implementation plan, the paper guide to the application, webinars, system guides, the application guide, updated AHP forms, and the application review request form, as well as a matching request form. The application process is quite simple. Just identify your co-applicant, review our materials, develop your application offline, request assistance if you need it by June 30th, and start the application as soon as June 15th. Lastly, submit your application on time by the August 11th deadline. From there, we will begin scoring feasibility, make a determination on awardees, and wait for our board to approve on December 18th so we can announce the awards. Next, we'll talk about scoring. This next slide is actually a tool you could use as you judge or score your own application. I will go over all of the categories briefly and in more detail later on in the presentation. But the first category is the use of donated properties with 5 points that are affixed. The next category is the sponsorship by nonprofit or government entities with, again, 5 points that are fixed. Then followed by targeting, which are up to 22 variable points. And then followed by housing for homeless, which are up to 6 variable points. Next is promotion of empowerment, which are up to 10 variable points. Special needs are up to 8 variable points. Rural, 5, which are fixed. Member financial participation, 3 that are fixed. Readiness to proceed, 8 fixed. Subsidy per unit, up to 8 that are variable. Community stability are up to 20 points and are variable. And the total amount of points that could be scored are 100 points. Again, please remember in 2019, the lowest funded score was a 67. So let's talk a little bit about our review process. The highest attempted score versus the Federal Home Loan Bank determined score. The difference is the highest attempted score that a sponsor makes is the score that is assigned after they fill out the online application. That score consists of points that are requested by the sponsor in each of the categories, but then those points are later verified by the supporting documentation that's submitted. And the points are maintained either by the Federal Home Bank or they are reduced by the bank due to either a technical problem with documentation or not meeting the scoring priority. Again, the final score is determined by the Federal Home Loan Bank. During the scoring phase, the Federal Home Loan Bank does not look up additional information, seek external or public resources for additional information, or make assumptions on your project or application's behalf. So let's go a little deeper into the scoring categories. The first one, donated properties. Again, as mentioned earlier, you can earn up to 5 points if the land or units were acquired in the following manner. 20% were acquired for a sales price of less than equal or less than $100. 50% were acquired at equal or less than 50% of fair market value. 20% were acquired from a federal government, federal agency, or an instrumentality thereof. Our next category is sponsorship by a nonprofit. And here your application can earn 5 points if you had participation by a qualified organization. And those organizations are defined as either a nonprofit, a state or local political subdivision of a state or local housing authority, a Native American tribe, Alaskan Native village, or government entity for Native Hawaiian homelands. The nonprofit or entity has to have an integral involvement in the project. And there has to be ownership interest for rental projects only. Income targeting. Here, applications can earn up to 22 points based on the household area median income. More points are awarded for projects that serve a higher percentage of low-income populations. And the AMI is defined by HUD guidelines. Please keep in mind that the point structure differs from rental and owner-occupied properties and projects. And in this instance, the score gets expanded all the way out to 6 decimal spaces. That is how competitive this process gets. Our next category is serving homeless populations. And here you could earn either 3 or 6 points as long as you reserve units for homeless individuals, which at least serve 6 months, which at least allow for 6 months of occupancy. The point value is going to depend on the percentage of units reserved for these households. And to earn 3 points, you must reserve between 20 to 50% of the total units for homeless households. To earn the 6 points, you have to reserve at least 50 or more percent of the total units for homeless households. Our definition of homeless persons is a little more expansive than the industry standard, and it's defined as either persons sleeping in places not meant for human habitation, sleeping in emergency shelters, graduating from a transitional housing program specifically for homeless persons, being discharged from an institution or foster care with no permanent residence available, or if you would be discharged from an institution if no permanent residence were available. It also includes victims of domestic violence and persons who are doubled up in a situation of overcrowding. And below in our chart, we give a definition of unit size and number of people per unit. Our next slide talks about the empowerment services. And here you can earn between 0 and 10 points for programs or services that empower project residents. The different techniques include case management, counseling, daycare services, education, employment training, financial literacy, credit counseling or budgeting, life skills, on-site primary healthcare services, resident serving on a sponsor's board, sweat equity, tenant counsel, transportation, youth or after-school programs, and new to this year, pre-homeownership counseling by an online counselor for approved counseling agencies. That's new this year. And we're going to have further information on this section on our website. And then lastly, post-homeownership counseling for owner-occupied projects only. Our next section is for populations with special needs. And it works very similar to our homeless section, in where applications here can now earn between 4 or 8 points based on the percentage of units reserved with persons with special needs. And they are defined as physically or mentally disabled, developmentally disabled, recovering from physical or emotional domestic abuse, recovering from chemical dependency, or persons with HIV and AIDS. And 4 points will be awarded for those units that are reserved between 20 to 50% of the total units for households with special needs, or 8 points would be awarded for total 50% or more total units of households with special needs. Our next scoring category is rural. And here, applications can earn 5 points if at least 75% of the site addresses are located in rural areas. And addresses qualify as rural according to the USDA guidelines and definitions. Next category is member financial participation. Applications can earn 3 points if the member commits to the project in any one or more of the following ways. It must be at least 5% of it must be participating in at least 5% or more of the total development cost, and either an equity investment in loans, whether they be permanent construction loans or bridge loans, or letters of credit or lines of credit. You can also earn participation if there is a donation of cash or services equal to in the amount of $300 per unit. Or you can qualify as donation if the member donates property to the member, to the project. Readiness to proceed. HP applications can earn up to 8 points for projects that meet all 4 development benchmarks. And they're related to either site control, zoning, remediation of environmental issues, and funding commitments. Please keep in mind that this is a category, an all or none category, and failure to demonstrate benchmarks in any one of the 4 can result in a reduction of points. Subsidy per unit. Here, this is a variable in which you can earn up to 8 points depending on the extent to which a property uses the least amount of AHP subsidy per targeted unit. In other words, the less amount of subsidy requested, the more points, or the more amount of subsidy requested, the less points you will earn. Our next category is community stability. And here you can earn 3 points in the category of planning. And that is number 1, demonstrating that you have consistency with a plan. Number 2, demonstrating that you meet targeted priorities identified in said plan. Now, you could earn the additional 17 points through either obtaining a community designation, being assigned as or identified as a distressed community, developing in a major disaster declaration, or demonstrating a low homeownership rate. If you get involved with owner-occupied rehabilitation, redevelop blighted property, redevelop brownfield sites, or adaptive reuse, historic preservation, preservation of subsidized housing, sustained affordability for home ownership projects, mixed income housing, land bank, reuse agency properties, architectural compatibility, the creation of community assets, and the creation of visitable units. Next, we'll talk about some of the common scoring issues. Some of the issues that we find during the scoring process is we either find missing forms, missing signatures, unclear documentation, not recording all of the income in the income workbook under the sources and uses, unclear project costs, forms signed by incorrect entities, or not meeting the financial thresholds or percentages.
So our second polling question, do you think your organization will score 67 points or more? And if your organization is not submitting an application, I guess just in thinking about those scoring criteria, do you think that you would be able to obtain a score of 67 points? And the 67 points comes from the minimum that was awarded, the minimum points that were awarded an application last year. So do you think your organization will score 67 points or more? Just click yes or no. We'll give you about 20 more seconds so that everybody has a chance. 5 seconds. We will close the poll here. And yes, so that's great. A lot of people think that they could obtain a score of 67 points or more. So great, it could be a very competitive round this year. Again, so Fred, we'll go back to you to continue the webinar.
Thank you, Elizabeth. So next, we're going to speak about feasibility. So feasibility is as equally important as scoring. Again, as I mentioned in the scoring phase, there's a cutoff that we meet so that you could get to scoring. And last year, that cutoff was a 67. So all projects that scored a 67 or higher proceeded to the next phase, which is what's called feasibility. So again, you can't get awarded a project without feasibility, or you can't get awarded a project without meeting the scoring threshold. But together, you get awarded a project. So in 2019, 5 applications scored competitively, but they didn't pass feasibility. Unfortunately, these projects did not receive an AHP award. Feasibility, again, is just as important as scoring. So what happens during the feasibility process? Well, the Federal Home Loan Bank underwrites based on feasibility criteria by the project type. The high scoring projects undergo the feasibility review. And at this point, this is when the Federal Home Loan Bank will reach out to the sponsor or developer and ask for additional information and or clarifications. Here, the sponsors will have the ability to address feasibility issues. Again, determinations of feasibility are at the sole discretion of the Federal Home Loan Bank. And again, I'm going to mention it, projects must score competitively and pass feasibility to be awarded an AHP commitment. So what are the areas that we look specifically for in feasibility? Well, we look to identify the need for the subsidy and the viability of the project. We look for some cost reasonableness, and that is can include construction. We look for readiness to proceed. We need to make sure that the development team has the capacity to pull off said project. And we need to make sure that there is a demand in the market for the type of housing that's being proposed. Let's talk about some of the common feasibility issues. Well, one of the main ones are unexplained high construction costs. The level of need for AHP subsidy requested does not exist. or there's limits outside of our feasibility guidelines which are unexplained, or the project is not ready to proceed, or during the process there are changing financials, and the bank cannot determine the financial feasibility due to the changing of financials. And then lastly, the failure to operate viably for 15 years. So how can you prepare for feasibility? Well, the first thing you could do is you can make sure that your costs are accurate and justifiable. Be ready, have your team ready to answer questions in a timely and thorough manner when we hit the feasibility stage. Have your documentation ready and assembled. And you can run your own feasibility analysis based on our implementation plan. We give you the percentages and guidelines there.
Our final polling question here: will it be more challenging for your organization to meet the scoring criteria or the feasibility criteria? If you could select one, we'll give you about a minute. Fred, do you typically see that projects are ready, they're essentially shovel ready when they come in to you, or at the end of the, I guess at the award time, that they're ready, that you see a lot of shovel ready, or there's still a lot of projects that are waiting for something to allow them to move forward?
Well, typically in development, you get the mixture. You have projects that thought they were ready, and then there's delays in construction, either due to funding and or just a normal construction. But for the most part, our projects are all worked on time. We have a 2-year limit to complete a project, and we worked very closely with our sponsor, with our awardees, to make sure that they meet those deadlines. But for the most part, the short answer is, yeah, they're ready, and they're ready to go. Affordable housing is at a great need, and we have a lot of great applicants, savvy developers that know what needs to be done and are ready and come in and come in ready with their projects.
Good. And it looks like people think the scoring would be a bit more challenging than the feasibility. So that's not surprising. Fred, if you want to continue on.
Yep. Thank you, Elizabeth. Let's talk about the 2020 changes. So what's going to be new in 2020? Well, as far as general changes, and I'm going to get into this a little bit in our following slides, is going to be around the acceptance of acceptable signatures. We're not going to see any threshold changes, but there is going to be a scoring change in where empowerment now is going to allow for online pre-homeownership counseling with 3 approved sources. And then our life skills definition gets a little more defined this year. And the readiness to proceed in zoning. We are actually going to prefer a legal opinion this time around, and it's going to make it easier for both the applicant and for the reviewers here at the bank. And then lastly, under feasibility, the way that we validate construction costs is going to be a little different than in the past. So, AHP updates. So, as a result of COVID-19, we understand that, it's going to be a little difficult, and there's going to be delays in being able to obtain signatures from certain offices, whether it be governmental offices and or even from the private sector. So basically what we're going to allow, this goes back to that signatory comment on the previous slide. We are going to allow for an attorney to certify a form and or the sponsor organization's president, chief executive officer, chief financial officer, or executive director. Again, these forms are going to be allowed to be signed for the submission of the application, but prior to disbursement, we are going to go back and we're going to ask for the appropriate signatures to be provided. What this does is it gives us a little bit more time. It gives you the opportunity to submit an application on a timely basis and not be penalized point-wise for it. But there is the responsibility of, again, having and providing these signatures prior to disbursement. And then lastly, as we get asked questions regarding COVID-19, we are taking question and answers, and we're posting them to our AHP webpage for everyone to see in order to make it fair. So again, we have one form that's updated this year. It is the 2020 Empowerment Memorandum of Understanding. And the way that this form is going to work, it's in Excel format, and it's going to have a drop-down menu. Once you select the technique, it's going to pre-populate with the implementation plan definition. And it has a specific language that we're looking for and that the third party is going to certify to. And then again, there's going to be additional questions that are going to focus on the third party provider information and the sponsor describing and demonstrating that there is a direct link or commitment to the residents. And then all else we'll just use a certification to address the AHP policy according to our implementation plan. So let's talk about some key dates and some of our next steps. So right now, what you could do is you could access our resources and confirm that you have AHP online access. Consider your matching opportunities, identify your partners, and request application assistance if you need it. Yesterday, we opened up the period for application assistance, and that's going to go on through the end of the month. So if you would like to review your application, and if you have some questions about the implementation plan as it pertains to your project, you're welcome to request that assistance, and we'll be glad to help you. On June 15th, our online application opens. And then on June 30th, as I just mentioned, the application assistance closes to enable us to focus on providing technical assistance to our members and making sure that those applications can be submitted via our online system. And then on August 11th, our round is going to close promptly at 5 p.m. And then finally, on December 18th, our awards will be announced. So what are some of the next steps? Kind of what I mentioned a little bit on the previous slide. Please make sure that you register and check your access for AHP online system. Review our AHP implementation plan. And I cannot stress this one enough. For all of the slides and all of the techniques that I went through in scoring, there is actually a definition and a further explanation in the implementation plan on each one of those categories. Identify a partner and determine your roles. And if you don't have a partner, you could submit for a match request. In this instance, you may be a sponsor or developer who doesn't have a banking relationship with one of our member banks, but would like to submit an application. And we could partner you with a bank that operates in your footprint and is interested in participating in AHP. And if you're one of our member financial institutions and you just don't know of a project that's going on, again, we will keep you on the list. And when a developer approaches us looking for a member to submit an application, we will put the two of you together. Another thing you could do is review resources, our forms, our guidelines. Take a look at the paper guide to the AHP online application. And I really recommend that you fill out the paper guide and use it as you fill out the online application. It's a big help. They're the exact same questions and they follow the same order, but it helps keep you organized as you fill out the online application. And again, as I mentioned, if you need application assistance, please don't be shy about asking. We opened up the request period, and it does close on June 30th. So get started early, and if you begin early enough, you can actually gain access to our 2020 AHP Tips webinar, which is going to be later developed and posted. So in order to request application assistance, you will need to go onto our AHP webpage and download the form that you see on the screen here. And basically, you just fill it out and submit it back. Now, why do we request such a formal process? Well, as you can imagine, last year we had about 166 applications come through, and we want to make sure that we don't miss anyone and that everybody gets an equal chance to have their questions answered. So if they were just merely emails to myself or other staff members, that may preclude some people, or they may get lost or fall through the cracks. And we don't want that to happen here. So we ask that everybody submit an official form. All forms will be logged, and then the staff will divvy them up and distribute them and respond accordingly. So who are your community investment contacts? Well, on the top of the list there is Megan Kreider. She is the manager for the Affordable Housing Program. She oversees the whole process and the whole program. And then you have myself, who is the Community Investment Relationship Manager. And then finally, John Bendel, who's our Senior Director and runs the whole Community Investment Department. Elizabeth, I'll hand it over to you.
Thanks, Fred. That was great information. We have a number of questions that have come in, so we'll just get right to those. I thought this was a good question. Is there an application fee?
There is not. There is no application fee.
How do we know if a bank is a member bank? Is there a list?
There is. So if you go on the Federal Home Loan Bank's homepage, under the tab members, we have a listing of all of the participating member financial institutions. That is the quickest and easiest way to ascertain that.
Should 0 points be assumed for a request of $750,000?
So I am presuming that that question is asking, is there a point structure affixed to the amount that you request? Meaning that if you request too much, you're going to have less of a chance gaining points. And the answer to that is no. You can apply for as much as you need for the project. So you will not be penalized for the amount that you apply for. Now, and I believe what you're getting to is, well, how do we get to that subsidy? And it goes to the amount of subsidy that's requested, and that goes by a per unit amount. So if you over request subsidy, you will gain less points in that category. But that has nothing to do with the total amount of subsidy that's being requested, and not so much as to the amount per unit. And those thresholds are, again, outlined in the implementation plan, and you will see how much per unit will give you how many points.
Okay, another question has come in. If a member bank donates homeownership counseling services, could that qualify for empowerment and member participation points?
No. So that it could qualify under one or the other.
You mentioned a legal opinion to support zoning. What are you expecting this opinion to say?
Just to verify that the parcel is appropriately zoned for what the project is proposing. And that is because we are anticipating that maybe many municipal offices are going to be closed, and that third-party documentation stating that the project is appropriately zoned may not be able to be attained. But if we have a legal opinion certifying that it is, then we'll be willing to accept it.
Very good. Here's another question. We've applied before. Is there a document we can access that tells us specifically what has changed from last year's application? And I think that may be, I'm familiar with the low-income housing tax credits, and I know PHFA typically puts something out that shows they have a little summary of what's changed, and sometimes their application will have in red changes that are noted.
Right, and I think what you're going to see for us is there were no changes in scoring in the implementation plan. Basically, the changes were outlined as far as some of the signatures that we're going to allow, some of the forms that we're going to use, but those are more administrative, so to speak, as opposed to point structure or values. Now, that's an excellent question to ask year on year, end on end, because it is not a given that every year we're going to be the same. As a matter of fact, this year we are currently undergoing a housing needs assessment, and I'm sure many of the folks in the audience are going to be asked during the survey about what they feel their housing needs are. And depending on the feedback that we get on the housing needs survey, we may reallocate points and change what next year is going to look like. So there is going to be that ability for input, and then at which point we will provide the document that's being requested now in this previous question. But since no point structure has changed, we don't have that outline out.
Okay, thank you. And thank you for everybody who is submitting questions. These have been great. What type of ownership interest does a nonprofit need to have?
Another good question. So if you take a look in the implementation plan, it clearly defines the percentages. So basically what we're looking for in the rental project is we don't want the nonprofit just to participate ancillarily. What we want them to do is we want them to be materially involved in the project and to have a significant ownership in the project. And that is due to the compliance period, to make sure that someone is accountable, to make sure that the period of affordability is being held throughout the period of time.
We have another question here. At the time of application, can the sponsor sign on empowerment forms on behalf of third-party service providers?
I'm sorry, Elizabeth, can you repeat that question again?
Yes. At the time of application, can the sponsor sign on empowerment forms on behalf of third-party service providers?
Yes. So basically, we are coming out with further instruction on that, and we are going to be posting that information specifically to the website. So we are, as we're speaking, we're developing, and I'm posting it, continuing to post information on the website. I do not want to misspeak, so I'm going to direct everybody to our website for that particular answer.
Good advice. Keep checking the website. Is a developer fee allowed on a rehabilitation project with no transfer of ownership?
Is a developer's fee allowed? And I'm sorry, can you repeat the rest?
Yes. Is a developer fee allowed on a rehabilitation project with no transfer of ownership?
Yes, as long as the developer's fee meets our feasibility guidelines. And again, those are identified and in the implementation plan. So The other thing I want to make very clear, Elizabeth, we get a lot of questions, you know, online and via the phone, and the advice and answers that we give do not supersede the implementation plan. So at the end of the day, it is the implementation plan that holds true. When they look at scoring, when they look at feasibility, when our analysts are looking at your applications, they are matching what was said, what was submitted, compared to what is said and written in the implementation plan. So I cannot stress enough, even above and beyond the advice that I give or the answers that I give, please always double check and go with the implementation plan.
So it sounds like we should have that printed off and right beside us as we're filling out this application to continue to refer to that and to any updates on the website.
Absolutely. I mean, when you take a look at the successful applications, it's the folks that really do their due diligence, get that plan, know it in and out. And I'm telling you, I've worked with sponsors now, and they could recite the plan in and out. Some of them know it better than I do, and they are the ones that are getting funded year after year. They know exactly where their score is. They know exactly what we're looking for. And to be honest with you, when we receive an application by someone like that, it's actually very easy to score, and it's very easy to process. So a lot of times, you know, we look forward to receiving applications from certain sponsors because you just know that you're going to get a quality application. And then sometimes, you know, we receive applications that in a roundabout way answer your questions or lead you down a couple different paths, and it makes it very difficult to score. And unfortunately, sometimes since they become so difficult to score, they end up losing points because you almost have to guess at the answer. So my recommendation is always make it easier on the person that is grading your application. If you could look at the question and you can reasonably come up to the answer that you want us to see, you know, it's gonna be easier to score. We're not in the business of taking away points or precluding people from accessing our funds. We're in the business of putting this money out there. We owe every year, we exhaust all the funds that we have. So again, it's our preference to help you do a better job in submitting your application and help you get and keep all of the points that you could possibly get.
Can AHP funds be used for a community asset like a garden or a walking path?
The short answer to that is no. The AHP funds are to be used for the development and the construction of the affordable housing unit itself. But we do look for, and we do give additional points for projects that do include those techniques. So that is included in our application, and we look for that, we encourage that, but we do not pay for that.
Do you have any specific advice to increase your chances of a higher score?
Yes. So the first thing to do is self-score yourself. Now, once you take a look at where you scored, there are going to be certain categories that, you know, you're not going to be able to do anything about. For example, if you're in an urban area, you're not going to get the 5 points for rural. If you don't have the properties donated to you, you know, in the manner that's listed there, you know, you're going to forgo those points. So then you got to take a look at the maximum amount of points that you could possibly get. And then within that, you're going to look at the different categories. And the categories that I found where folks can change things a little bit are under some of the designation techniques under community stability, under empowerment, to make sure that they fully take advantage of all of the techniques that are available to be had there that they could do. And then lastly, the subsidy per unit category. That gives you the ability to see how much subsidy you need, and or if you could possibly infuse cash into the deal from other funding sources to reduce the amount of subsidy that you need for your project and increase your points. Those would be the areas that I would recommend that you look into. And then lastly, one of the ones, and I mentioned it during the presentation, is the readiness to proceed. The readiness to proceed is one of the categories that is generally a make or break category, because there are 8 points. And if you don't meet at least one, if you don't meet any one of those thresholds, you lose all 8 points. It's not sliding scale. So you want to make sure that you have all of your documentation there in the area of zoning, your financial commitments, your environmental issues, and your ownership of property. Or so you want to make sure you have all of that. Site control, I should say. You want to make sure you have all of that and not forgo those points.
Great, those are some great tips. I thought this was an interesting question. Are more rural or urban projects funded, and and does this funding favor senior or family projects?
So an interesting question. So what we do after every funding round typically is we run an analysis to see, where our funding went. The outcomes, I don't have them readily available in my mind, but as you can imagine, we have a tendency to favor more urban areas just because of the amount of projects that come out of some of our urban areas greatly outnumber the amount of projects or opportunities that you have in a more rural setting. Some of the other funding sources outside of AHP actually favor bigger, larger projects in urban areas. And then, again, if we're matched to that, then that advantage just carries through, and you see it through our giving. But that's not to say that we target it that way. It's just what we find, and that is one of the reasons why we're doing the housing needs assessment, to make sure that we are going to be aligned for next year with what the true needs are in our footprint in all of our communities. And when I talk about that, I talk about our 3 states. The Federal Home Loan Bank of Pittsburgh operates. Our footprint is in West Virginia, Pennsylvania, and Delaware. And of course, we have urban and rural areas in all 3 of those states, and we have different needs like elderly, family housing, and to speak a little bit about does it favor the elderly over family type housing. I wouldn't go as so much as to say that, as to where we're more point driven, and again, to the degree that the external funding sources are favoring, that's where you're going to see that the affordable housing program kind of like falls in line with. What I did notice over the years was we did a housing needs assessment in 2014, and it indicated that there was more of a need for owner-occupied rehabilitation. Because of that, in the subsequent year, we allocated more points to owner-occupied rehabilitation to the degree to where it was favoring that particular technique. And we got we went way out of balance with it, and where we had more applications for owner-occupied rehabilitation over rental, over senior housing, over everything else, to the point to where we made an adjustment a couple of years ago, and we reduced the points so that it could be more equitably distributed amongst all the projects.
Thanks. I think we have time here for one last question that came in. Are you anticipating any dates changing due to the coronavirus pandemic?
So the short answer is no. Once we've announced our opening and closing date, those are going to stay. So we are trying to be as flexible as possible within it, and like I said, we've allowed for the changes in signatories. But in order for us to make the awards on December 18th, which is when our board, which is when our board meets, and we'll make that determination. We have to have all of this determined and scored and ranked prior to then. So we are staying with our timelines: June 15th, opening of the round, August 11th, the closing.
Okay. Well, thank you, Fred, for today's presentation. It was great information, and thank you to everybody who submitted questions. It was great interaction and engagement with Fred. And thank you to everybody for joining us for today's webinar. If you have any further questions regarding today's presentation, please feel free to reach out to either Fred or myself, and we'll be happy to assist you. A recap of today's presentation will be posted on our website in a few days. And for those of you who need CPE, look for a survey to complete after the webinar closes. Certificates will be sent out within the next 2 weeks. We hope you'll also join us for the next webinar in our 2020 Spring Affordable Housing webinar series. On Tuesday, June 9th, myself and Josh Vance, a senior manager here at McConnelly & Asbury, will be reviewing the placed in service requirements for the PHFA checklist. Then on Wednesday, June 17th, Holly Glauser, Director of Development at PHFA, will join us to provide an update on low-income housing tax credit developments at PHFA, including talking about the revised timelines due to COVID-19, the status of the 2020 tax credit application awards, and any other new developments. You can register on McConnelly & Asbury's website or on our Affordable Housing Gurus blog. Thanks again for joining us today, and have a great rest of your day.